As an investor, understanding the true potential of your capital is essential, and that's why IRR is so important. So we've made a free IRR calculator. It's very basic, it's very high level, but for those of you that are just starting out, it's a great tool to download just to get more familiar with the terms, how these metrics are calculated and tracked, and what you should be paying attention to when you see that next investment offering. So I'm going to jump in here now and I'm going to share my screen and we're going to walk through it together. So as you can see, we've got a pretty basic high level dashboard of the IRR calculator. We've got IRR, cash on cash return, ROI, and equity multiples. So these are some very high level terms that you'll see in any, especially a private placement, any offering like that, whether it's 506B, 506C, whether it's a real estate deal, oil and gas, you should basically see these returns on any of those offerings. So those are very important to pay attention to and to know. Obviously, this calculator is focused around IRR, but we've provided some other metrics as well. So again, this is very high level, and you can even use this if it's not comparing offerings, just as a hypothetical investment to educate yourself and others a little easier. You can see here we've got the input values fields in yellow. Everything else is formulated, so you don't have to worry about that. Then down here, we've got helpful definitions. So definitions around these key metrics that we're actually looking at here. And then some tips and tricks about the data entry, some basic high level, what to look for in these sorts of returns to assess, is it good or bad? And now, again, that will often change based on the investor's circumstances, their situations. Every investor is different, but there's some kind of market general standards that you'll want to look for as well. So obviously here we've got, the equity multiple threshold. You typically want to look for 1.5 to 2x over, I'd say, a 5-year period is pretty common. For IRR, I would say mid to high teens over that same period is very common as well. So getting familiar with, what is standard out in the marketplace, I think is helpful as well. So as you can see here, you've got your initial investment. In this scenario, we've got $100,000, average annual cash flows. So input what you expect to receive annually, just in total in one lump sum. And then the exit value, what you think you'll get down the road once the asset sells or whatever you're invested in goes full cycle. And then we've got the duration of years as well. So we've got a drop down here and you can see how the metrics change too as you speed that timeline up. So you can see the IRR goes up because you shortened that duration of time to have that full cycle, have that asset sale, whatever it may be. So you've realized that profit faster, and that's really what IRR is tracking you. So it's a great thing to look for. As you can see, the cash on cash is something that stays consistent, obviously, because that cash on cash does not change. But the ROI and equity multiples change as the duration changes as well, because you've got less total return if you have a shorter time. So as you can see here, if you sell it in year 3, you've cut out 2 other years of cash flow that you would have received if it was a longer duration investment. And so that's where, things like equity multiple and ROI will change as well. But this is, again, it's just a very high level, very basic. I would say, in order to make an investment decision, you're going to want a lot more information than just this. Like the probabilities of actually receiving those cash flows. So looking into the business plan and understanding what that looks like. Same thing with the exit value. Are they being realistic about that? But if you want a high level, hypothetical, ability to run scenarios and compare different investment opportunities, even just high level based on what they're projecting alone, this is a great tool to get familiar with that, to double check that the numbers are accurate, and to see, what scenarios work best for you in your circumstances. So if you head over to our website, we got a link in the description below where you can download this tool for free.